Good day, everybody. Brian here from quantlabsnet.com. We are going to show you the next round of epic proportions as always. And what does that entail? I have now taken all of my available bots through, I've shown on my last stream on Tuesday night, 3,000 plus. About 7% were profitable, 7%. So what I've done is I've gone back 6 weeks till about mid-April, actually 2 months, and I've been able to generate with futures and options, futures only, what are the most profitable trading bots at that point, and even if you're running them today. So let me get over to our screen here, and I'll show you what I mean. All right. So what's important here is AI is pretty optimistic. We know that. Okay. So I'm very aware of it. But what I want to show you is we've got over 140 profitable bots that have been tested over the last 2 months, downloaded real market data for both futures and options, and collectively have a variety of different stats we can work with to see which ones are the most consistently profitable trading bot strategies consistently in very severe volatile times. So what I want to first show you is I purposely wanted to show you that if we start, let's say 2 years ago. So now I've gone from 1 year to 1 year to 2 years, and that's for back testing. As you can see here, it goes all the way back to April 2024. So over that time period, nothing happens when you have all these bots running, but combined at this point here, we've been able to, again, AI, if it's real or not, 3.2 million and add on an additional P&L of 4.25 million. Okay. So average Sharpe at 1 and 49% win ratio across 100 plus profitable trading bots. We're not going to do that. But what I have also as a big surprise is this. This is the enchilada of it all. So I um, purposely wanted to do a spreadsheet here just to give you a rundown on, and especially color coded, to give you a rundown of we got what 147 strategies here that are profitable. Even at 41 cents with XRP, it's still profitable. Howdy doody. Anyways, one of the things I want to show you here are these metrics right here. So as I mentioned, my back testing, we've gone back 1 year, and how many out of that month, how many months were profitable? So you can see these top ones were 12 months. Some of them were last 3 months. Okay. So you would want to use these three strategies right here. Okay. These ones right here. Okay. That I've highlighted. Those are the ones you want to use because they're completely profitable over the last number of months. So what are they? We got wheat, Black Sea supply shock, and GC safe haven. Why am I not choosing the top two, which generate quite a bit? Because they're shorting. I'm not a big fan of short. Most most institutions will always do a combination of long short, but this is just the general direction of that strategy. Now I'm trying to push the word bot, a strategy over the word bot, because bots are kind of juvenile terminology if this is being pitched to institutions. All right. So that's why these are valuable. Okay. So we've got here these three. So again, we have a wheat, uh, Black Sea supply shock, and then this one, the GC gold safe haven for volatility. Okay. So those are the ones which would make sense. Okay. that would be profitable. Okay. So this is how I'm able to measure it. Plus, you got max drawdown percentage, profit factor, Sortino, win ratio, Sharpe, all that fun stuff, and annual return. Okay. So there's always different metrics that you could use to say I've got a winning strategy. And it could be any of these. To be to be really um, blunt, I think it's more profitable monthly returns that should be focused on more than anything else. So we have here these natural gas strategies as well. So let me show you some of the detail here. So again, we would have added on another four million plus since a very short period of time, somewhere since April, May of this year. Okay. And we have all these different other visualizations. One thing I will say about this particular PDF, this was the output of it is created by Claude Fable. I just finishing touches on everything for this whole thing. I just thought, I know what Opus can do. Let's see what Fable can do with all the extra visualization that I don't ask for. And this is what it gave me. So these are all the profitable bots. We've got a table here, and that's where that spreadsheet comes from. So this is the better thing to work with because you can manipulate it. But the real fun goes here. So you can see here we got different directions. So we have long, short strategies as well. Institutions love that because those are arbitrage opportunities. Okay, just to put that up. So we have our first one, natural gas seasonal collapse. It's a short. Here is important to know. Um, so for me, I need to know where that bot lives. For internal historical data, I need to know where that lives. And this is also how's the volatility measured? Is it approximated or is it actual real data? Okay. This would be a typical option strategy. So you can see here we have the scorecard I've shown before, right here. See, this is not the best strategy because it's getting a C. Okay. Um, it's a bearish trend. I don't know if that's current. Yeah, that's for the last 20 bars. So these bars, what I'm mentioning, are 4-hour bars. Okay, so it's a bearish signal currently. That's what really matters because everything comes down to timing. You could say we have a very strong strategy in place, meaning, yes, it could pretty well be called a full weathered strategy that could be run a lot of the time because it should be able to stay profitable. This is the important part, what I'm showing you right here. Very important. So again, we look at the equity curve and drawdown analysis. And again, if you're looking at it from a portfolio perspective, these are probably most important strategies, or sorry, metrics that mostly matter. Okay, so we're going back 2 years. But what we really care about is this year. So you can see here, we're going back 1 year right here. So we had a nice big run up here, beginning of the year, and then just had a big tank. Now, I keep saying this. With this type of strategy, this is not a reflection on the raw price of the instrument, this one being natural gas. This is an equity curve built around the performance of a strategy built creating natural gas. So you have to know the difference there. You can see here, generally, there's a nice trend starting to pick up here. We can confirm that right here. This is what matters right here. And remember, this is a shorting strategy. I don't like shorting because it's high risk. But you can see right here, it's been doing pretty good on the monthly returns. And that is what matters. What matters is that today is June 11th. Okay. So we can also measure day by day within the current month. As long as it stays green or profitable, it still has that potential to trade profitably for the month, day by day within the month. You can see here we've had some weakness in the last few months, but this month, only 11 days in, it's doing pretty good as a strategy. Okay, so these are again the additional Fable uh, charts added. So you get trade P&L distribution, rolling 3 months Sharpe, and again all the important fun stuff. But here, uh, we can see the overall profit being made across February, March, April, May, and current month of June. That is what matters over anything else because you want to deal with this or work with a strategy that's got some strong momentum behind it for the last 5, 6 months. As long as it stays profitable, you're doing okay. Now, this is remembering how much volatility we got in the market right now because, or in the last pretty well a year, because of the crazy volatility that all the we'll just say Western politicians have brought upon the markets. All right. So we have our second one. Same idea here. Okay. Bearish. And it's a shorting strategy, which we don't really want. Okay. So what I've done here is I've taken a back test, but I'm taking the original strategy rules and applying them to not just for that month when it was generated, but how did it do since then over the last 2 months? And some of these can be created well, the creation date is right here. The bot location is right here. So you can see here that this bot was created only 2 days ago. So it's doing pretty good. Um, but the performance if it was running all year would have been very strong because this is real market data. But here again, it's getting a C rating. Okay, so it's not bad, and this is all driven by AI. That's the good thing because the AI doesn't care. It's just everything's all relative to what the AI result pumps out, which is all Claude models. And this latest one is, as I said, from Claude Fable, which was released 2 days ago. Okay, so let's go into a long only. So let's take a look at that wheat Black Sea supply shock. So you can see it's a long. Okay, so this one was created. Look when it was created, April 28th. So this is almost a 6 week old strategy, but we're still testing the trading logic from that strategy across the board, including from the day it was created, including March and current June. Okay. So the annual return's only 4%, but the question is, what will the markets push out so far? Well, let me just figure that out right now. If I go over to bar chart, let me do a bar chart here, or better yet, I'm very curious to do this. Let's take um, our standard metric uh, of let's say the S&P 500. So if I look at bar chart, let me bar chart year to date S&P S&P return because we'll use that as a standard benchmark. Okay, so it's up year to date 6.16%. Okay, so that's our standard benchmark. So if we go back here, we look at um, it being 4%. So it's still underperforming. Okay, so that's not going to generate alpha. Okay, you can see here it's been losing. Actually, it's been gaining some good momentum since February, profitable. And again, same thing. And again, this is a longing strategy. Okay, a long strategy, which I like. So this is a pretty good strategy to work from. Okay, because it's got some strong momentum there as a return. Okay, so you can see just right across since February, it's been pretty good considering the losses that some of the S&P 500 has been taking. And then again, we have this other wheat Black Sea supply shock trade as well. Same thing. Okay. So if we go to our next one, which would be the gold safe haven, we get now an actual result. Now, to be fair, I'm not sure if this is a measurement over the last 5 years or if that's year to date. Okay, just that number. I'm not sure if that's 5% year to date or 5% for the last year. Okay, we can see right now for the last 20 bars it's bullish, which is good. That's what we want. And when you look at this is the bizarre thing. Over the last 3 months or number of months, the win ratio has been not very good because we know that gold hasn't been performing that well. And part of that is because of this big collapse back in March, but it's trending up a little bit. Still has some volatility in that. But here's the steep drop. And currently, right now, June is not a great month for this strategy. So you probably wouldn't take it. But if you kept running this and waiting out for, let's say, from June to July for the next month, but June started to profit, you might start to think, well, maybe I might take on that strategy as part of your ones that you would consider trading. Okay. So that's the whole mindset here. So if you look at crude oil geopolitical breakdown, this looks good. That's a great strategy. That's generating alpha 11.9 because it's beating S&P 500. But here's it's a bearish trend right now. It's short. But you can see here had a couple of bad months there. Okay, going back to March. Look at the strength it's been generating over the last few months. So this, in fact, might be beating out S&P for the last 3 months. Okay, and you can see just it's been doing pretty good, almost out of 3 or 4 on the Sharpe. Again, right here, like some nice positive momentum. Those are the sort of things you want to look for. Okay, I could go on and on. We have only 429 pages to go through. Obviously, we're not going to do that, but we can get an AI to do it because now because now you got the data. That's what matters. This is real market data. What I'm showing you is the visualization of certain strategies, 100 plus that are profitable for the last 2 years, year, and which ones to trade and when to trade. That is what matters. And now I can use an AI to generate a agent or just some kind of autonomous process that will deploy looking at real-time data for the last number of days, weeks, based upon monthly returns, and when to turn on or off whatever strategy looks best to trade. That what is what matters. Okay. And that's why this whole process has been run. Okay. As well. So some of the generation two bots that get generated because of those 400 trading rules, they do get applied, but because it's going farther back, you won't see those bots in
Market
there
data
yet.
connection
But moving
lost.
forward, you start seeing more of them because they're customized to improve the performance of the bots. Okay, so let's go back to our screen here. All right. So that's what I want to showcase here as a highlight. Okay. So if we know we're going to look at the ES in the futures world, which is S&P 500, let's see how many. Let's see if we can find any ES. So here we have an E-mini butterfly with options strategy. Let's analyze that. Okay. This is a pretty good strategy when it has a max drawdown only 4.4%. That's pretty good for an equity strategy. So let me just see. It's an E-mini on AI spend. Now, again, we need to remember this is important. I'm going to tell you this visually. This is important to remember as of today, June 11th. Tomorrow we have an IPO for SpaceX, and then sometime we have two more IPOs coming, Anthropic and OpenAI. If any of those IPOs will flop, then these type of trades with the Nasdaq ES will just go down because long term they may come back, but if they don't live up to the hype, they'll tank. I don't know which way it'll go because I'm never right, but that's important to remember as a indicator, as a caveat on where we're at right now currently. So let's go back to the screen. All right, so we've got here this one strategy, this E-mini, with the magic of a search facility in the PDF at Adobe. Let's see if we can find it.
Market data connection reestablished.
So here we are. So this is the particular strategy ranked number 25, E-mini NASDAQ EI CapEx Call Butterfly. Look at that return. That's amazing. So that's definitely generating alpha. And the one thing I did like about it, let me just pull this up in the spreadsheet. Now, a lot of people go, when these files coming out, Brian? They won't. They will not come out. Why would I? This is my edge. I'm just showing you what AI can do. So here's our, uh, where's our butterfly? So that was, um, you can see all the gold. I think we're right here. Yes, right here. This is the strategy we want to look at. So, max drawdown 5.7, 5.39. We do have some positive monthly returns, but not very many for the year. We'll see that in the chart. So 9.2% is pretty good return. Look at the AI, how much it estimates. That's insane. But here, it's a good strategy. If we knew about it months ago, I would have traded this, but it's been top. But I personally think this will not be. I mean, I could be wrong. If the strategy continues because of the positive we get from these IPOs, and that's a different story. We could run these strategies. Okay, so that ranking on that scorecard is an A. That's pretty good. It's trending, which we like, bullish for the last 20 bars. Um, the one thing this is amazing. To only have a max drawdown of 5.4% on this particular strategy is unreal. This is because of options trading enables this. Um, annual return, is probably 50% higher than the alpha you'd get from the S&P. This particular strategy we're talking about, Sharpe ratio is pretty good, and these are tough times, especially in equity market, stock market. Win ratio is not bad. Profit factor is over 2, which is great. And let's see what's going on here. So here we go. Generally, we're seeing what we want to see out of the stock market. It's living up to its a reputation, we'll say. And look at this. This continues along into this year. That is really good. And check this out. So we've had some bad months, but very strong in April. Not bad. And the risk is very low as well, considering if you were to run this. This is a pretty good strategy. Okay. Um, I'm not gonna lie. Okay. It's for March, April, and May. Done very, very pretty good. Okay. Considering the markets aren't doing that great. Okay, so I just want to show that to you. Let me show you another one. Like there's some gold strategies in there that look pretty good. I'm not going to go through that, but let's just see what's giving you some decent returns. So when you look at it, outside of shorting natural gas, we've got wheat, surprisingly consistent, not going to generate a lot of alpha for you. Gold, oil, gold, and then copper. And see we have here the NQ mean reversion. I didn't even look at this one. So for the NQ, annual return of 4.9. Yeah. So the other strategy is better for the return. We got gold, 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 lots of gold. This one might be good too. And that's what we looked at, the E mini AI CapEx. That's a pretty good strategy. Okay, so these are all ranked. So now we're starting to see some ES, which is the S&P 500. Okay, let's see. So this is not beating it's not generating any alpha. Okay, if it's 6.9%. Also, same with this one as well. So there are some pretty good strategies in here. This one, AI rotation, no, yeah, it's not doing too good. But there's some really, really good strategies in here. And everyone's going to go on about Bitcoin. How's Bitcoin been doing? Well, let's see. So Bitcoin is all the way down to number 38. Okay, so that's a gold versus Bitcoin. That's an arbitrage. But just only on a Bitcoin itself. You can see, okay, that's at 40. Let's just see here. Yeah, so this is the strategy to look at, but it's short. Now, I've shown last week the micro Bitcoin shorting strategy. They did amazing. We don't want shorting strategies. I like what's long only, right? So let's see if we can find any Bitcoin long strategies. So what do we got here? An arbitrage. I think it's all shorting for Bitcoin. Well, here's one. Volatility breakout. Um, these returns are pretty good. Okay, so let's say so that's total P&L. Okay, so let's do this. So we'll do a data sort on column G. Let's see, column G. Yeah, here. I think I got to highlight. This is Libre. I think I got to highlight all the different whole spreadsheet, all the data. Okay, data sort. Okay, hang on here. Let me just pull this pop up here. Okay, so we're going to do G, column G. Hmm. Anyways, but a good chunk of that profit, let me just do this. Uh, remove. Okay, that should help out. As you can tell, I'm not a spreadsheet user here. Data, sort, um, annual return, total P&L. Okay, so we did something here. So we did it in reverse. So I went the other way. Okay, here we go. So these are the most profitable. So there's the different ways, right? So you can see here we got gold futures, ECB, hike, safe haven. Bit pretty high. Only 1 month that's been positive. That must be a monster month. Gold geopolitical risk, same. These are not very good, but these are just due to monster months. Uh, regulatory hedge, um, silver, and so on. So there are some strategies that did very well, but they're not. It looks like these were um, only for 1 month. So there must have been some event that you could have traded and done very well, like 580,000 out of 3 million starting. So that's where a lot of the profit came from. All right, so in there you'll see the occasional trade of Bitcoin, Bitcoin volatility breakout, gold as well. Okay, so let me just put everything back the way it was. The other thing is You won't find any Forex in here at all. Just having download problems with that because it's good old interactive brokers. At the bottom here, you'll see some altcoins like XRP and Solana, which are pittance, not very good. So crypto's been out of whack for a while. Alrighty. So that's what I've been working on for the last couple days. Um, and I think this is very important to showcase the timing of this on a different variety of levels. So you don't have to just stick to one asset. And everything is based around timing. But for me, looking at all this type of analysis, what I will focus on, I like to focus on steady eddies. I want to work on strategies that are consistently profitable for each month, um, and build it on momentum as opposed to trying to bring as much uh, crazy moves. Because if there's crazy upswings, there's going to be a high risk of downswings. So you don't want to work on those type of strategies or have them in an active portfolio. I mean, if you're young and you're willing to take on those strategies, sure. But if you're just trying to grow money in a trading account, I would rather focus on what I showed earlier. Even that Nasdaq was pretty impressive, even though it's not going to generate alpha. Um, well, it did actually. I'm sorry. If the markets continue with that type of strategy, even if the markets take a couple of uh, monthly losses, but generally over the whole year and has enough momentum to continue generating more profitable months, I'll definitely trade that as opposed to these crazy Bitcoin short and blah blah blah. Because that'll give you a heart attack if you keep trading it. But you never know. There's always that opportunity. Okay, so let me just show you some other stuff here. Okay, um, what I want to show you. Uh, Now I know a lot of people are going to go, how do I join your stuff? Right here, um, you can join right here and just get on my email list or here. Just go to quantlabsnet.com. The other area, I don't put as much into the blog anymore. I put it into the forum or the groups. There's a public forum group here. A lot of my latest content goes in there. Also, people ask me, how do I get started in algo trading? I have the start here option. So that will take you to hftco.com. So in here we have a variety of different paths you can go. Right now with AI the way it is, and it is kind of expensive, but if you want to be able to expedite your trading, um, learning for algo trading, this is very cheap. Okay. I have evaluated the value on this. This is in the hundreds. So be on the lookout for that. Also, we've got a career one as well. And what basically this is it will go in, give you working copies of strategies in Python that actually work with Interactive Brokers Trader Workstation in Python, um, all here. Everything's all AI generated. So what you can do, and I've shown demos of this in various videos on how to work with AI to work from a working coding base of strategies that work again in Python. So that right there takes out a lot of the difficulty. So you're not doing a course, okay? The other thing is what matters is um, you can I show you how to use what I have with VS Code. Okay, right here. So I don't program it. I don't hand code anymore. And a lot of the people that work with these type of tools like Claude Code, this is the Claude Code VS Visual Studio, sorry, VS Code extension. I'm just not one of those people that work on in a shell. Okay. Lots of people are like that. Uh, so I don't get the latest models. I'm fine with that from a cost perspective as well. So there's that. Now, now, this is really important to understand, folks. Very important to understand. So we have here just for what, 47 bucks or something right now. Um, gives you a lot working from, okay? Plus there's a career one as well. Okay, so it's an extra 20 bucks. This is really important to understand because I see so many. I'm trying to hold back here, but there's a lot of people out there that are giving people a false hope when it comes to getting an HFT career by being an expert in C++ plus plus or some language, and they get into these 200, $400,000 jobs. Fierce the first, the competition's beyond fierce. Namely, they're only going to be looking at um, uh, people from Ivy League schools, preferably with math, physics as a PhD. Coding is so below, it's the lowest priority right now because that's an automatic that you need to know, and you got to be a master at it. But yeah, I mean, my view of it is pretty simple. The money's good, hard to get. I'd say it's trying to win a lottery. And right now, um, the way to do it properly is to interface with AI because part of the interviewing process is very simple. Okay. They're not going to be working off of static questions. So when you get these leak code and all that, um, the leak code gives you trading problems, or sorry, programming problems, challenging ones. And there's all these other sources. They're worthless. Um, you need to know how to role play in these interviews because when you move up the food chain in the interview process in these firms, you're going to be starting out with probably interns. You'll probably start out with junior programmers at the beginning, testing your technical knowledge. You people at that, even at that level, are going to be pretty smart. So they're not going to give you the typical questions that you would expect from lead code and the like. They're going to give you interview questions off the cusp, which you cannot prepare for. So there's a couple of plans to overcome this. Either you get some kind of uh, training platform that you worked on. They want to see how enthusiastic you are. Okay. They want to see, hey, what's your status online? Are you some kind of guru and people come to you because you've got this great working trading strategy? They might be interested. They're going to ask you questions around that, and they're going to ask questions around that coding of those type of projects. AI generated or not. Preferably, if you're trying to get in this role, you don't want to do AI. Okay, that's number one. But as you get more, you impress more on whoever's putting you through the ringer at the interviewing process. The next step, you're going to start talking to directors, team leads, and the like. You're going to be working off of some leak code crap. You're going to be working with questions like, okay, here's a strategy that we have or considering. Here's the return. We want to improve it. What are you going to do? And show us how you're going to do it. Be it in front of a whiteboard or online or however they do it. That's called role playing. The only way you can get through that process is AI. And playing with AI with the chatting against an environment I just showed you um, with uh, with just questions that you may have that these interviewers will give you. They want to see how your mind works. And a lot of the AI now is pretty well there. Even Ken Griffin admitted that. So it's not about memorizing static questions and static coding problems or coding um, the language. What matters is now, and has been in place as you move up that food chain, is how you think as a trader. And I've said that many times. And there's also the AI when it comes to the math. Coding's the last portion as you move up. And the other thing that's very important to understand is that when you go into these firms today, AI is going to be there. That's going to be your new enemy. Okay. So you got to know how to use AI to your advantage. Hand coding, maybe. I don't know. Every environment's different, but AI is going to be there and you're going to have to know how to use the AI and get yourself into the mindset of a portfolio manager. Everyone gets excited when they get paid 200, $400,000. Why stop there? Why don't you get into the role of what I just showed you on those spreadsheets and those PDF files on how to think like a portfolio manager? And now with AI, what they want out of you is a systematic portfolio manager for one portfolio. That will pay you 1 million on average per year. Okay, fine. But if you get into the mindset of not just becoming a portfolio manager for one portfolio, what happens is if you start to think multi folios, your base salary goes from 1 million to $21 million on average per year. So why are you why are you lowering yourself just to be a coder? Don't make no sense. And the only way to get there is by doing what I'm doing, by playing with AI. And the only AI now that can do it is Claude. Now, this new Fable is something different. Okay. It's expensive, but you got to show the passion and don't stop at portfolio manager. You want to get into those big, fishy, multi folio. It's me. I've seen if you screw up as a portfolio manager, you're out. Same with any level. It's like being a batter in baseball. And you want to be paid the most, you always consistently have to perform in a in positive. There's no negotiation on anything that you screw up on. That's why they pay you this money. If you can consistently perform, you'll be well compensated. So remember that. And that's at any level in these firms. You screw up once, you're gone. Um, but if you feel you can get in there, you can learn all this stuff on your own and you can do probably pretty good. And now I'm on a point where I know consistently for the last 6 months what strategies to run, which ones are giving you positive momentum. They may not beat the market, but they're giving you profit. And that's the number one game to build up your trading account. That's the number one rule. Warren Buffett. Three rules. Remember this. Rule number one, don't lose money. Rule number two, repeat and only focus on rule number one. Rule number three, do not lose money and refer back to rule number one. So the point here is never ever lose money in your trading. When you get all these people that are so-called consultants or educators or gurus, they don't make it in the field of these firms because they can't perform. So they go out on their own saying they're an expert at this, but they can't hold a job in these firms for very long because they're out on their keister. So remember that too. And that's why they can never, ever prove that they're a quant. They're not a quant. But if they were, show us the money, show us the third party verification. And this is another warning I mentioned in the last week in a variety of video and content. With what I've been showing now for the last couple of weeks or a week or so with the Gen 2 stuff, Gen 2 bots, it's been verified that casual traders that are serious that want this type of data, they're going to be paying $300 to $800 with no verified track record. So if I get a third party verified track record, it goes up to 1,000 a month per month, and it goes for anywhere from 1,000 to $3,000 per month for verified third party. So the AI said, "Oh, you could easily get that, no problem." Okay, that's going to be my new market. So the two things I can say: if you want to learn all this stuff, you get in now while it's cheap and it's affordable. The other thing is, um, if it's third party verified, I could go institutional and building all this stuff, turn it into a trading software as a service, and charge from 3,000 a month to 10,000 a month, and still be better than some of the competition. Right now, my primary competitor would be Hedgeye. I haven't seen what they pump out, but I can assure you they're a lot. They don't hold a candle to what I'm pumping out now. So there you go. So a couple things here that I know I'm ranting here, um, but I did mention this. So if you want to take it seriously, uh, what you want to do is you want to go to quantlabsnet.com and get on our email list to follow along. Okay, right here at the main home page, and just join this. And we got a little ebook C++ infrastructure thing, and that's what's going to help. That's what help will keep you in the game as well. Anyways, I've talked enough for 46 minutes. Thanks for watching. Have a good day. Um, yeah, so you have a good day, and we will talk to you later. Bye bye.